Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenivek on Bloomberg Radio.
President Trump posting on Truth Social this morning that the U.S.'s deal with China is done, subject to final approval with President Xi and me. Trump posting that after 20 hours of negotiations in London between the U.S. and China, which saw both sides clean up, as Commerce Secretary Howard Lutnick put it, the deal that they reached in Geneva about a month ago. Here's what Treasury Secretary Scott Bessent, who was also part of those talks, had to say about where they stand during testimony this morning before the House Ways and Means Committee.
China has a singular opportunity to stabilize its economy by shifting away from excess production towards greater consumption. But the country needs to be a reliable partner in trade negotiations. If China will course correct by upholding its end of the initial trade agreement we outlined in Geneva, and I believe after our talks in London they will, then the rebalancing of the world's two largest economies is possible.
Jennifer Welch joins us now. She's the chief geoeconomics editor at Bloomberg Economics. She's formerly the director for China and Taiwan at the National Security Council at the White House. Pleasure to have her here with us in New York. Scott Bessent there talking about the possibility, the chance here that China could course correct, as he put it, by upholding its end of the initial trade agreement they outlined in Geneva. Let's start with what you've seen emerge from these talks in London. How notionally different is that agreement to what we saw a month ago? Sort of where do things stand here as we look at this kind of 90-day pause and any progress that might have been made?
Well, notionally, we are back to where we were a
Square
month ago,
one, yeah.
or we were supposed to be a month ago in terms of clarity on what China is going to do with rare earth exports, and in particular, rare earth magnets, in return for the United States essentially seeming to walk back many of the export controls and other restrictions that it put in place after Geneva to build leverage for these talks. But I do think we're a little bit far away from what the president's claiming in terms of a full deal with China. That remains very much outstanding. Tariff levels don't appear to have been adjusted in London, and we're still facing this August deadline of reaching that larger deal before higher tariff rates come back into place.
Mm-hmm. How much friction does there appear to be right now? Are we moving at all any closer to a point of consensus?
I think at the moment, tensions have come off the front boiler, but they're still very much on the back burner. And they could rise again at any point, particularly if there continue to be disagreements about what exactly was agreed to, or we continue to see any sort of supply disruptions in terms of critical minerals and other key exports from China. And then again, the entire looming deadline is really more about tariffs, which they don't seem to have discussed in London. And I think that's going to be an even stickier set of issues to address. China now realizes they have this major hammer in the form of these critical mineral export controls that they can leverage. And I think that really dilutes the U.S. ability to push China towards the deal that Washington says it wants.
I want to ask you a little bit more about that. I'm going to paraphrase something from our colleague Sean Donnan in the D.C. Bureau who covers trade. I'm going to botch this, but I think the thrust of it was the longer you go, time kind of evaporates the efficacy of the leverage that you've got. And so, yes, there's this leverage when it comes to the rare earth minerals, but the longer this gets attenuated, the longer these talks go on, the closer we get to this deadline for this 90-day pause. Sort of, where does that leave the U.S.? Where is its leverage, as you see it in these talks, in these negotiations?
Certainly never going to disagree with Sean.
Never.
I will say, I think the time
for everyone.
Exactly. I think the timelines here are slightly different. The amount of time it would take the United States to build up independent supply chains for critical minerals and rare earths is more a question of years, whereas these negotiations, I think the U.S. would prefer to wrap up, if not by August, within several months time frame, right? So I think in terms of leverage, China's going to maintain that pain point for at least the near term. Now, the United States is trying to take steps to diversify its critical minerals dependencies, but it's been trying to do that for over a decade at this point, and it would take some really serious investments in order to accomplish that.
So, of course, we know China is a major trading partner here with the U.S. And, of course, we talked about some of these rare materials. But what exports in particular are economists really keeping their eye on in terms of broader clarity on tariffs?
I think the key question is going to be with tariffs now at still very high levels. They brought them back down from their peak in April, but they're still, U.S. tariff rate is around 40% on China. Chinese tariff rate on the U.S. is upwards of 20% when you take into account tariffs that existed before Trump came back into the White House. We think that's going to take U.S.-China trade down by about 70%. And so we're still likely to see some shortages. We're still likely to see price hikes. The key question is going to be, how does that impact supply chains in terms of, is that price point too high where you don't just see higher price tags on the shelves, but you actually see things missing on the shelves because it just doesn't make economic sense for people to bring it in.
I'm old enough to remember when a chief, if not the chief motivator for these talks, this disagreement had to do with fentanyl and China exporting the ingredients for it to the U.S. and the wider world. Where does that stand? I mean, this is grown larger than that in terms of what the motivations are. But it seems to me, as I've been reading in since these talks have taken place, that's not something where we've seen much movement from the Chinese.
It's a great question. And it wasn't that far back. It was back in February and March.
It felt much younger then. Yeah.
Exactly. No, I think that those remain U.S. concerns, but they have very much faded into the backdrop. And I think that just adds to the list of complex topics for all these negotiations. It's trade and economic practices. Currency might be on the table. This was also not addressed, but just last week, Treasury released a report on currency practices where they called out China for what they felt like was not a full manipulation, but concerning practices. Now, we're adding supply chain risk to the table. And then, yes, there's fentanyl, which remains very much an outstanding issue in the relationship.
On a broader scope, as we're kind of looking at where the economy stands right now, just how fragile are U.S. consumers and the economy right now, especially as we factor in what these price hikes could look like if they do happen?
Great question, especially when you take into consideration all the other trade wars that are currently underway. We're less than a month out from the deadline for other reciprocal tariffs against every other U.S. trade partner coming back into full brunt of what they were on Liberation Day. And right now, we only have one semi-agreement, which is with the UK, and it's more of a framework to agree rather than a full agreement in itself. So I think a key question facing U.S. consumers is, are all of those reciprocal tariffs going to come into play? And then are we also going to see Chinese tariffs come back into play about a month later when that August deadline hits? You're looking at not quite everything on Liberation Day, but another kind of double whammy of some serious price hikes.
I'm going to take advantage of you being here because I'm going to Kananaskis next week for the G7 Leaders Summit. And the leaders of many of these nations are going to be there who are, as we understand it, in the process of having these talks, these trade talks with the U.S. Do you anticipate that that's a forum in which a lot of this stuff is going to be hashed out? Are you optimistic that we could see deals, at least in broad strokes, announced while we're there? So how should I think about that gathering and the importance of trade at that gathering in Canada next week?
Well, it's interesting. The G7 used to be this major forum for organizing a global response to major crises, from the outbreak of war to financial shocks. And now it looks like it's just going to be sort of the backdrop to President Trump hashing out deals with individual countries. And certainly trade tensions are going to be a point on the agenda, even if an informal point, in terms of really, I think, delaying this group's ability to reach consensus on some of those bigger issues. But yes, in terms of the trade discussions, we know that, for example, Japan, also India, might be looking to announce some sort of progress towards a deal at the G7. I personally don't think that's going to be in the form of full trade agreement, but probably something more like what we saw with the UK, a sort of framework to agree or kind of terms that they'll be negotiating over, with the expectation it'll still take at least weeks, if not months, to hammer out something more comprehensive.
And of course, tariffs have really been at the forefront for multiple weeks now, but what's the job market looking like? Of course, if we're thinking about price hikes, we have to think about whether or not that's, an affordability concern. What's the latest on the job market in about 30 seconds or less?
I'll be honest, I'll defer to my U.S. economic colleagues on this, but my expectation is that I think all of this is weighing on certainly U.S. consumers' perspective, U.S. businesses, investors. They're not going to want to be making major moves when all these tariff deadlines are looming, and it remains incredibly unclear what deals are going to be hashed out and where tariff rates are ultimately going to land. And it seems that uncertainty is going to stick with us for at least another month, if not longer.
Jenny, great to see you. Thank you very much. That's Jenny Welch. She's the chief geoeconomics editor at Bloomberg Economics, based in Washington, but joining us here in New York today. She's the former director for China and Taiwan at the National Security Council at the White House. Again, looking ahead to the G7 next week. I'll be heading there this week, and those talks get underway in earnest on Monday of next week. 2 days worth of talks, and President Trump's presence looming large over the agenda at that summit. This is Bloomberg Businessweek on Bloomberg Radio and YouTube. David Gura and Norma Linda in for Tim Stenevec and Carol Masser, who are off today. This is Bloomberg.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Alex Corsino joins us now in the studio, the global chief economist at Manulife Investment Management, which has, as of June, $1.6 trillion in assets under management and administration. Alex, great to have you with us. And I suppose I should start with the economic data du jour, that is the CPI data, the sense of the state of inflation here in the U.S. How do you see all of this playing out? How do you see the Fed looking at that panoply of data at its meeting next week and kind of considering the state of the economy today? And how are you doing the very same thing?
Well, first off, thanks for having me here. It's great to be here. When I look at the data today, the way I look at CPI is basically, it was perhaps a surprise to a lot of people, but not shocking necessarily, simply because when you look at all the inventory that got pulled forward during the first quarter of the year, there's a good chance you're going to see some of that have to work its way through before you see slightly higher inflation prints. So at this stage, I think basically the message for the Fed will be very much on brand. It's been one of the most reassuring or perhaps frustratingly, depending on how you look at it, messages from the government, yes, and most consistent, which is we're in a good spot and we're not going to do anything about it just yet.
When you look at all these prints, of course, the average person, it can be a little bit confusing. It feels a bit mixed. I mean, you hear a consumer that's stretched in some senses, but still maintains its resilience. What right now do you think, how is the economy currently standing?
Sure. I think that's a great question. The way I'd look at it is if you look at GDP, so the broadest measure of growth, there's going to be some misleading signals out of that. Just like in Q1, we got a weak print because of trade. We're going to get a bit of snapback in the second quarter. And then we sort of settle into something during the second half of the year that we think is going to be softish growth, probably a little bit cooler than is strictly speaking comfortable, but generally speaking, still not quite recessionary at that point.
I'm going to take advantage of the fact that we have you here from Montreal, so north of the border, as this roiling trade war continues. How much are you kind of looking through it? How big of an impact is it having on your ability to sort of game things out as you look at the global economy?
Well, I think one of the things you hear a lot of economists talk about is scenarios now. We are very loath to give out point estimates at this stage, and I think that's fair. I think one of the things that has been ring-fenced since early April, though, is probably the worst-case scenario. So people have a base case, and they figure it'll land somewhere between the two areas. In Canada specifically, there's clearly a lot of concern given how interlinked we are with U.S. trade. But there are silver linings. If you look at it from a structural perspective, there's a lot of inefficiencies in Canada that I think are being looked at closely with this as the catalyst to perhaps move on from that.
So this is like the intra-provincial trade, for instance?
All that, yes. For some reason, there's trade barriers between provinces in Canada.
So, of course, this is an evolving conversation, evolving negotiations, but how much of an impact are economists currently baking in terms of the effects of tariffs on the U.S. economy?
Sure. Well, I think one of the things that's interesting for us is it's almost like running to stand still. We go through our forecasts about once a quarter, and about 2 or 3 weeks ago, we started the process. So they're coming out in a couple of weeks. And when we reopened the books and looked at exactly what our assumptions were after all the escalation and de-escalation, we're sort of left with, we're actually not that far off from where we thought we'd be. One thing that I think is different in the analysis is when you looked at what was happening at the beginning of the year, and especially as you looked at it from the Fed's perspective, the general assumption was it would hurt the U.S. a little from a growth perspective, move inflation up a bit. So you sort of created a slightly more hawkish narrative. But because you're literally tackling every country in the world at the same time, the dynamics become a lot closer to places like Canada where you factor in a more traditional growth hit. So we think that's probably changing perceptions a little bit.
Given that, I wonder how you see all of this ending up. And there was talk, certainly on the campaign trail, of there maybe being a kind of 10% universal tariff. Is that, do you think, where we might be headed in all of this? We've had all of this talk of negotiations between the U.S. and other countries one by one. But maybe things kind of land in this more unified kind of general tariff regime. Do you see things ending up that way, or do you think it's going to be more finely tailored, narrowly tailored?
So it depends on the region, and I think it's a matter of economic importance. So I don't think it will be a broad 10% tariff on the bigger regions. I think there will be a lot more nuance to the argument. And perhaps for the countries sort of at the far end of the tails, you might see something similar to that.
Are we approaching a tipping point in U.S. growth?
Sure. So I think one of the interesting things here is when you look at most forecasts now, the second half of the year is broadly seen as a period of cooling. I'm not 100% sure we haven't already started to see tentative signs of that at this stage. So just like GDP was a little bit soft last quarter, as I'd mentioned, it'll be a little bit hot next quarter. You have to look through net trade and look at things like consumption. When you look at downward revisions to those, and when you look at things like retail sales, vehicle sales, you get a sense that maybe you're starting to see that cooling point. It's not enough to get nervous about, but it is a slight shift in trajectory that we think maybe signals that we might be starting to slow at this stage.
Yeah, I want to get a sense of your pessimism or maybe lack of optimism. So like we've gotten the latest forecast from the OECD, we got the World Bank forecast as well. All seem to be indicated that we're heading for a pretty dramatic slowdown, not just in the U.S., but globally.
Yes.
Is that a foregone conclusion as you see it? Is that kind of tied up in the uncertainty around the trade negotiations, or is it something that you think is definitely, or not definitely, but very likely to happen?
Well, we do think that you see a slowdown based on where trade is going. Mm-hmm. I think it's pretty unambiguous that we're going through deglobalization. We've probably been going through it for the better part of a decade at this point. If you look at post-GFC, you sort of hit peak trade and you've sort of been grinding down slowly over time. That trend we expect to persist. The uncertainty is problematic for more export-oriented countries. So we view it as the more domestic you are, perhaps the more diversified your supply chain is, the better off you're going to be.
So Powell's been receiving a lot of pressure from the administration and others alike. I mean, President Trump, then this morning we had J.D. Vance also making some comments. And then, of course, talks about potential replacement is also ongoing. Two questions. Is the Fed behind the curve? And secondly, is there any wiggle room for cuts?
So I think they are in a good spot, not to be too trite about it. But generally, when you look at the data, I sort of think of it as a tug of war. But instead of having two ropes, there's three. You have uncertainty pulling one direction, inflation another, and growth/labor in the third. Inflation is not a problem at this stage, so you can give a little slack there. Uncertainty seems to be receding a little bit, but you're not quite there. And growth is still holding up, so you're not really getting much. Ultimately, we think what does happen, though, is growth sort of dominates the narrative, and that's when you start to get cuts built in.
Let me just ask you lastly, got about a minute left here, sort of what data is most important to you as we look ahead to PPI tomorrow, that Fed meeting next week? What are you placing the greatest credence in when it comes to U.S. economic data?
Sure. At this stage, I'm really looking at the month-to-month data. You want to see where the sequential prints are going. Retail sales, to me, is critically important. I think the U.S. consumer is the straw that stirs the drink. Mm-hmm. And the way I'd view it is, unless you get a real confidence shock and weakening labor, you probably have a status quo, which might not be overly hot, but not terrible. So we're looking for high-frequency data points, high-frequency data points around labor consumption. Those are really where we're focused right now.
Well, thank you so much for a wonderful conversation. Our thanks to Alex Cristino, Chief Economist at Manulife Investment Management.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, this is David Guerrero with Nora Melinda filling in for Carol Masser and Tim Stenovec, who are off today on a busy Wednesday. We're going to talk a bit about the economy here in just a moment. Going to check in on Los Angeles as well as protests there continue. And we've seen a strong response from the governor of the state of California, Gavin Newsom, in recent hours, commenting on the effort by the President of the United States to bring more military to that area. Brad Stone, the editor of Bloomberg Businessweek, is going to join us. But I want to start first with the economy, the data that we got this morning on the Consumer Price Index from the Labor Department. Charlie Pellet characterizing it for us here as benign, surprisingly benign inflation data. And Julia Coronado joins us now. She's, of course, the president and founder of Macro Policy Perspectives and is with us from Austin, Texas. Julia, great to speak with you. And I want to get your read. You can feel free to crib Charlie's line as I have there about the benignness of these data. But what do they tell you more broadly about the state of the economy, the health of the economy, the CPI data that we got today?
Well, that's great framing. And by the way, happy to join you as always. I think we see a few cross currents in the data. So there is some initial signs of tariff pass through in certain areas of goods like furniture and certain recreation goods. We see that those prices pushing higher. But there were also some offsets. So we saw some weakness in areas that could reflect softening demand. So travel prices have just been persistently weak. Airfares, hotels for the last few months. Sporting events saw some weakness this month. So that could reflect cooling demand and be, an indication that the economy is in fact slowing. And that dynamic might prohibit firms from passing on prices or passing on the cost of tariffs through to final consumer prices to a greater degree. But it's very early. It's only May data, so it usually takes 2 to 3 months to see any impact. Remember, firms have inventories on hand. A lot of goods, a lot of apparel being sold was already purchased before the tariffs. So it normally takes several months to see the full impact of something like a tariff passing through to final prices.
Julia, what are you looking to see out of the data to come? Of course, we have PPI coming up. Of course, we have the Fed that's going to be having its meeting next Wednesday. So we'll hear the decision then, where they're expected to hold rates steady. But what does the Fed need to see right now to pivot?
To pivot towards cuts, I think they need to see a lot more than they're seeing. Number one, we know there's just going to be some time to see the impact of what's already been put in place. So the tariffs are real, they're being collected, they're either going to go into profits or they're going to go into final consumer prices. Somebody's going to pay for this. And it's going to take the entire summer to really see that impact in the data. So I don't think the Fed I think they've basically taken the summer off the table. And let's keep in mind, too, that one of the details in this morning's data, and this will depend on the PPI data that we see tomorrow to some extent, but the gain that is implied by today's CPI for the Fed's preferred measure of PCE still suggests that annual rate is going to push higher, maybe even 0.2 higher. So we're estimating that it'll round up to 2.7% year on year from 2.5% in April. So benign, yes, but at the same time, that leaves the Fed above their 2% target for 4 years plus. And that's why I think we've seen a little bit more hesitation by the Fed to rush towards rate cuts or to, signal any kind of imminent change in policy, because they've been missing on their inflation target for a long time. Meanwhile, unemployment rate is still, in their full employment range. So they're going to have to just keep things balanced for now, hold their fire, and just gather more data. As frustrating as that is for market participants, I don't think we're going to learn a lot from the Fed next week.
Julia, let me move away from the Fed to ask you about what we heard from the Treasury Secretary, Scott Bessent, this morning. So he downed some coffee on an overnight flight from London to Washington. He testified before the House Ways and Means Committee after 20 hours of negotiations over trade policy with the Chinese. But he was asked about deficits. He was asked about this legislation that's kind of making its way through the Senate right now. And I'd love to get your sense of the argument that the administration is making about the potential for growth here vis-a-vis that legislation, and sort of how you see all of that playing out in the months ahead.
I think that there's a lot of spin going on, and I certainly would characterize that as being what we heard from the Treasury Secretary. There isn't an economist who actually puts pen to paper thinking that this will reduce deficits. And one core driver of thinking about the growth outlook is the immigration outlook, which is getting even more draconian by the day. You're not going to get 3% GDP growth if you're contracting the labor force and doing mass deportations. Those numbers just don't add up. So growth can save you, but you have to put in growth-friendly policies. And what we're seeing is, they're channeling money away from sort of high fiscal multiplier categories like social insurance or infrastructure projects, which actually crowd in investment, to tax cuts for wealthy individuals, and that those individuals tend to save a lot of their gains from tax cuts rather than channel them into the economy. So I don't look at the overall details of this package and say, number one, it's definitely not going to reduce the deficit. And number two, it probably isn't going to be, this whole suite of policies isn't going to deliver 3% growth anytime soon.
Julia, speaking of Scott Bessent, he's also being floated as a potential Fed chair replacement for Jerome Powell. Can you break it down a little bit for the viewers? Does a new Fed chair mean quick cuts?
Not necessarily. I mean, I think, look, Secretary Bessent understands the structure of the Fed as a decision-making body. There's a lot of people he has to contend with. He can't just come in like a bull in a china shop and dictate policy to a very large committee. And that committee is not scheduled to turn over very quickly. So he would have to come in. Clearly, he would probably lean towards policies like faster rate cuts or larger rate cuts that the president prefers, but he's going to have to bring the committee along. And he's also a guy that he's a markets guy. He's not going to want to take actions that are going to really spook the bond market. So so I wouldn't expect, I think actually the bigger question when we think about Secretary Bessent as a possible replacement for Chair Powell is who would replace him at Treasury. He's really been seen by markets as the cool head in the room and the guy who understands markets and kind of can talk the president off a ledge at times. Who would replace him? I think that's a much more salient, meaningful question for markets in the near term than what he would do as whoever President Trump nominates as Chair Powell's replacement will probably lean towards more dovish policy, whether that's Kevin Hassett or Kevin Warsh or Secretary Bessent. They're all going to probably lean in the president's direction. So that we know, and they'll probably be somewhat constrained. But if we lose Bessent at Treasury, does Howard Lutnick take the reins? Who else could step in and replace him there? I think that's pretty important.
That parlor game begins anew, the one that we saw after President Trump was elected there for a second term. Julia Coronado, thank you very much. It's always great to catch up with you. Julia Coronado, president and founder of Macro Policy Perspectives, clinical assistant professor at the McCombs School of Business at the University of Texas at Austin.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
David Gura with Norma Linda in for Carol Masser and Tim Stenovic on Bloomberg Businessweek Daily on Bloomberg Radio and YouTube as well. And a pleasure, as always, to talk with Brad Stone, the editor of Bloomberg Businessweek, about his latest writing. A pair of pieces here, one of which centers on what's been happening in the city of Los Angeles, the other about the United States, and a pivot away from the altruistic statecraft, the Marshall Plan, what America has been known for some time, to something different. Going to cover both those pieces of writing with Brad here on Bloomberg Businessweek. And Brad, let's start with the goings-on in Los Angeles. And your piece opens in the Businessweek newsletter, California today is a tinderbox. And you draw this contrast between the kind of picture of radicalism that the Trump administration is trying to portray here and what's actually happening in California politics. And I'd love to start there if we could. That contrast, that dichotomy between the image that's being portrayed by the White House and sort of where things have actually been trending when it comes to politics in your state of California.
Sure. Thanks for having me on, David. Yeah, this is not just a battle over ICE enforcement in California or law and order in Los Angeles. This is really a battle over the heart and soul of the Democratic Party in California, a blue state that has consistently opposed President Trump and his agenda. You mentioned President Trump is painting his political opponents as radical left lunatics, his words, but it is really not what's happening in California. This is a party that has moved to the middle. It's evident everywhere. Governor Gavin Newsom recently taking aim at things like health care for illegal immigrants, signaling the return of budget austerity to the state, speaking out against trans girls in sports, trans participants in sports. And, Rick Caruso, the billionaire real estate developer who lost the mayor's race in L.A., his star is kind of ascendant since the wildfires. And then in San Francisco, where I am, Mayor Daniel Lurie, who I interviewed last week at the Bloomberg Tech Summit, very much taking a page from the abundance agenda of the Democratic Party, talking about bringing business people in to start rebuilding the city, addressing homelessness and profligate drug use. So it's really a party that's been moving to the middle, maybe liberal by a lot of the standards elsewhere in the country, but very much a moderating party. And I think President Trump really wants to, attach the party to some of these images of protesters wearing masks on top of Waymos waving the Mexican flag. That is politically useful for him.
And I'm looking at the photograph right now in your story. It's a really striking photograph in terms of them waving the Mexican flag on the Waymos. What does all this say about the division in our nation right now regarding the topic of immigration? I'm seeing that these anti-ICE protests are spreading to New York City and Chicago and other areas as well.
Right. Yeah. Thanks, Nora. I mean, look, these are sharp divisions on display. I think that there are, major urban areas that have identified primarily with the Democratic Party that are protective of their own, that consider themselves sanctuary cities and consider this enhanced ICE enforcement and the rounding up of immigrants, some here illegally, some here on temporary work visas, at their places of worship, at their places of work, and they see this ICE enforcement as really an incursion into local sovereignty, into their own communities. And I think what has started in LA is really fatefully, I think, destined to grow in other cities. I think San Francisco is probably on the verge of following because of this protectiveness and the opposition to the Trump agenda. And so what does it say about the divisions in our society? That they're deeper and starker than ever.
Let me return to San Francisco, where, of course, you're based, and go back to the conversation that you had with Daniel Lurie. And maybe you could give us some sense here of who he is and what he's trying to engineer or do in that job as mayor of San Francisco. So he kind of representing that new brand of kind of centrist politics. How's he approaching the job? He's somebody who comes from great familial wealth. His relatives were founders of the Levi Strauss Company. What are his ambitions, and what inroads is he making in kind of changing the city, or I wouldn't want to say writing the politics, but changing the politics of San Francisco?
Yeah, you're right, David, that who he is almost says as much about the Democratic Party as what he's doing. He is an heir to the Levi Strauss fortune. His stepfather was a member of the Haas family that founded Levi Strauss. It's ranked choice voting for the mayor's race in San Francisco. But he won enough votes to elevate himself over former Mayor London Breed. He has a much more moderate board of supervisors, so it's only been a few months, and it's way too early to make any judgments about his tenure. But I would say he has maybe presided over the first glimpse of optimism in the city since our miserable run during the pandemic, and you can kind of see it in the commitments made by the business community to come in and help with law enforcement. A crypto billionaire recently donated some money to the SFPD to help them build a kind of high-tech hub outside the really dilapidated police headquarters. Things like just the public drug use and the homeless encampments. I think Lurie has finally started to make some progress on cleaning that up. We've got a long way to go. I mean, there's still no construction cranes in the city, but he is riding a wave of tremendous enthusiasm about AI and from the tech community. And I think that this is a new kind of California Democrat who is combining maybe some of the old liberal ideas with the business community and finding a middle ground.
So he's talking about Rick Caruso, but approval ratings for Mayor Karen Bass, who of course is left-leaning, have sunk since January's wildfires. How much of her legacy is riding on this moment right now in regards to all the protests going on, or have her constituents pretty much cemented their sentiments?
And Nora, that's a great question. And being from the faraway city of San Francisco, I can't say I know. I mean, she did take a beating during the wildfires when she was not in the city when they broke out. Just unfortunate timing for her. This is probably a moment for her to show her leadership. Now, I don't know if Governor Gavin Newsom is yielding any of the spotlight or oxygen to other politicians in the state. He has really cemented himself as the chief adversary to President Trump. And of course, that plays into Governor Newsom's hands when it comes to 2028. But look, I mean, LA is a tinderbox right now, and I think that Mayor Bass probably does have an opportunity to make up some of the ground she lost during the wildfires.
Brad, I want to turn to the other piece that you've written recently. That's going to be a feature in the latest issue of Bloomberg Businessweek magazine, and it focuses on the kind of unraveling of the Marshall Plan, and again, this kind of move away from altruistic statecraft. And so the U.S. for so long now, for many decades, has had this perspective that it can do well by doing good in other parts of the world, that by investing in disease eradication and education, all manner of other social programs, that's going to help the U.S.'s position in the world by helping other places around the world. You say that how other branches of the American government, countries, and multinational companies respond in the months and years ahead will be the defining question of at least the rest of our lives. So you've been watching, as we all have, these changes unfold over the last 6 or so months. Picking up on your question, which you asked rhetorically there, are we seeing other folks pick up the mantle here? How worrisome is it, the situation that the U.S. finds itself in vis-a-vis the rest of the world?
Right. Well, David, this is the opening essay for our July issue, and you know the challenge here. I get to put on my historian's hat and stroke my non-existent beard. And the point I was making here was that, going back to John Winthrop, the city on the hill, and George Washington and Lincoln, and this historic belief that the U.S. was a sort of set a moral example for the rest of the world. And of course, we didn't always meet the standard. In fact, we often fell short of it. But the Marshall Plan after the war, or Lend-Lease during World War II, which Churchill called the most unsorted act in history. We helped our allies, and not because we thought we would be repaid, but because we thought it was the right thing to do and that America would benefit from peacefulness and the spread of democracy. And, the current administration has really broke with that. If it's, canceling USAID, which really was the Marshall Plan for the developing world, or pulling back on PEPFAR, the program that addressed AIDS and HIV, pulling out of public health agencies and climate enforcement agencies. There is a big vacuum right now. And I think Europe has showed some inclination of picking up that slack, particularly when it comes to climate change or corruption enforcement in business. But otherwise, it's really left a vacuum.
And you mentioned a lot of these different things that have been changed under the new administration, of course, cutting foreign aid, withdrawing from international agreements. As you're really following all these different things closely and speaking with people, do you expect any meaningful shift in this dynamic?
Nora, I don't see where it would come from. I mean, I'm talking about a strain in American history of, collaboration and multinationalism, free trade, setting a moral example. But the president has seized upon a tradition that is maybe over the last century, certainly maybe if not as strong, it certainly coexists, which is isolationism, nativism, American first, and that is just completely central to the Trump administration and to who the president is. And so there's certainly no inclination that he is creeping back from that edge. And so the only question is there anyone else in the world to take up the slack? And now I do mention this Ipsos poll, which is really interesting. 46 countries around the world looking at sentiments about different countries. The sentiment that America is going to be better for the world has fallen dramatically, and the sentiment around China now exceeds the positive sentiment around America. So there's at least some hope that China picks up some of the slack.
Well, thank you so much for a wonderful conversation. If you all haven't checked out his stories, check out his stories on the Bloomberg Terminal. LA violence endangers Democrats' moderation, and America casts itself as the world's moral leader, but not anymore. Of course, we are seeing him in San Francisco commenting on those LA riots that are going on, but definitely check out his feature stories on the U.S. losing its moral authority across the globe.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.